We Hi, good morning. Good morning, everyone. My name is Andrew. Um, guys, to the call. Um, so one week on Saturday, we try to go over our what I call is our defense. And most of the time, we focus on helping business owners. So last Wednesday, I have over that with you. uh, an hour from now. So 56, whatever time zone. So it's gonna be everything we working on or we sharing today is exploding. Every is so much. Oh, yes, oh there. Uh, I'm going to check up on come on the call. And they just done on the other side. Steve, Hinsvard wants to go. Stan, how are you, sir?
Oh, now I can hear you. I couldn't hear
Oh,
you before.
oh, yeah. I don't know why Zoom is up, but so how you doing? Can you
Doing
hear
good.
me?
I'm out doing a little. I'm doing a little shopping at Aldi. I'm in the supermarket doing a little bit of shopping right now.
Oh, Thanksgiving shopping early?
Yeah, no, just shopping for dinner tonight. You know,
Oh,
doing a couple
okay.
of things. I've invited a couple of people to come on. Gina should be coming along. I can't see if she's on yet. We might have Michelangelo with the business card. Sheldon's going to go over a lot of good stuff today. So, oh yeah, we have a big meeting.
All right. Awesome. All right. So let me share this, what I call is the business owner because we is it and we focus on a lot on business. So what I do is first off, always remind we are not an age and we are not those the women are the consultant that provide a solution, sell anything. We provide the client.
Andrew, your sound just keeps cutting in and out. It goes soft, it comes perfect, clear, and then it fades
Oh,
out again.
no.
I'm not sure if it's your connection over there. Can you put this,
Thank you. Thank you, lovely Gina.
Oh,
yeah, on it, Stan? Can you put what you're sharing in the chat as well? Thank you.
that. Let me put it in the chat, so everybody can download it. Okay.
Maybe I had to close a few screen.
That's much better. Your sound is much better now, right, Gina?
Oh yeah? Okay.
Crisp.
Awesome, awesome. So that is then okay, business owner checklist, try again. Okay, I did upload it and it won't let me. Let me try again. Here we go. It say that my doc is docx cannot be sent because it's currently used. Oh, I need to close it. All right. So here we go. All right. Okay. There should be okay, everybody got that on the chat, okay? So I am pulling it up. The checklist right now again and share the screen. I think I know why I had to close the all of the open tab that take up maybe the space so that you still can hear me okay? Everyone?
Yes.
Yes.
All right, thank you, thank you. Now sharing. Okay, so this is how when either you have appointment with the business owner face to face or on Zoom like this. This is how I do it. I now I pull up the one piece of, I bring with me a notebook. And this put in the plastic clear what we call that clear cover sheet. And I bring like probably 3 or 4 of these copies, and then I walk in. So why? Because I don't want to carry in, like a whole computer, briefcase, and all that stuff, especially on the first appointment, right? So I'm just get to know the client, and most of the time, the client already come to us with you know with the request or an issue that want to meet you up on this list already. But let's say um we come across with the business owner that they have no idea, they want to need help on everything. They say, hey, I need a financial consultant, and I need you to help me. I heard that you are, financial consultant, so you can help me. So this is how we put it, we put it up for, we take it, show it to the client. And another thing, I just want to let you guys know, don't be don't worry about, oh my goodness, Andrew, man, this list here, I gotta get a PhD or something to understand all this stuff. Trust me, I don't know all this stuff even, okay? We have every category, we have a specialist on this, okay, of this subject. So, and all we have to know is what is it about and who, what major or main focus you might be a realtor or loan officer or a life insurance specialist, or you know, whatever you focusing on, do that, focus on that particular, you know, subject or topic or that service. But then we don't want, basically we call it you know, leaving money on the table. Also, we don't want, back in the day, I remember uh, when client asked me, oh, do you have commercial loan? Oh, sorry, we don't do that. Do you do group health? Oh, what are you talking about? You know, no, 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 no. You understand what I mean? So, and first off, I didn't have um, a company like this showing me how. Secondly, um, you know, back in the day, we don't have technology, we don't have anything that will be able for us to have nowadays, with well-versed, you know, rounded consultant. So that is, your time has drastically changing the industry. So if I don't know how I can address enough about, if you just have just like thinking of like uh uh oh, Andrew, if you what is your that jack of all trades, you're gonna be a master of none. I'm telling you now, if you're not a master of all trade, you're gonna be none. Okay, you you you're not gonna make any money. So so delete that. That was, yes, that was 20 years or 10 years ago. Okay, but not anymore. If you know, Elon Musk or many others, successful entrepreneur out there, uh, thinking just focus on one thing. We don't have, you know, SpaceX, we don't have social media, we don't have uh, um, PayPal, and we don't have a whole bunch, you know, Tesla, electric car, on and on and on. So, so you know what I mean. So that is important on what our platform with Dreams or with um, others, um, you know, affiliate company that we work with right now. So um, that's why I take my time to share with you the you know, that first before I go down the list. So quickly, just a quick glimpse on this. Um, um, we show people how to be their own bank. We call it private banking, and and because everyone have their own bank, right? I mean, talking about their um, how do you call Chase Bank and all that stuff? What regular bank? Let's say call it regular bank, regular banking. Those are not your bank. Those are, you put your money in saving somewhere that for that institute to hold your money. And we all know where, you know, just for convenient writing check or pay out um, bill and such. And um, when you, everybody have to save their money somewhere. And you know, the last thing you want to save your money is under the mattress. It's that's the worst place to do, right? And I find that be your own bank is the most efficient way to save your money. Or I learned from Sheldon that the most efficient way to stack your money, you know, um, and unless you find somewhere, it's not investment, you know. If some of you love to invest and try to have $500 and invest to next 30 day become 5,000 or 50,000, good for you, but we're not talking about that kind of saving, okay? That is investment stuff. But everyone have to save their money, and and be your own bank is the to me is the best strategy right now if you qualify, or if you suitable, or if you be able to. But everyone must have um, their private banking. And you want to know more about that, I promise that we will bring in the expert on each benefit um, on Wednesday nights, 7 o'clock, 1 hour. Okay. And we're going to walk through all this. So the next one is debt.
Hey, Mom.
So debt is a, I would say it's
All right.
almost everyone on top of everybody mind, because if you live in the United States, chances are we all have debts, right? And no one want to be in debts. Even there's two kind of debts. You have a good debt and you have a bad debt, right? So, but the best is no debt. So we have the program that efficiently eliminate all that. Okay. And then how to do that is through our Life Plan 360, and we will talk more on the later day on this subject. Okay, very, very powerful. We have a company just doing this. Again, they're just doing debt elimination. They don't do anything else and blah, blah, blah. Okay. So it's very, very big uh, solution or big demand on everyone's mind. So learn how to, but you don't have to unless you go, oh, you have that. Okay. I'll check with my company and set up the appointment. And then we send the specialist or the expert helping them. And then if it's related to licensing, um, then you have to have that license to to get paid. But if you're not, but some strategy that don't need license, then yes, you get paid on that, because we must be in compliance on everything that we do here. Okay. So also we have the business insurance, because we're dealing with business owner. The first thing is they need to have all the business insurance, um, every year they have to update on their PNC business insurance. And this also related to some later on we talk about the ER3. That's a different type of business insurance called private insurance. So but yeah, everyone, if we can reduce, again, these are the benefit that they need to know so they can make more money, whether it's saving or eliminate, like you eliminate debts, that means you make more money into your bank account, right? And quite often, no one, as business owner, they don't know how to build their business credit. We have an expert, a specialist on help them to establish the business credit and or personal credit. Okay, like building your own, FICO score personal. So these two go hand in hand together. And we also have commercial loan when you have business owners. Some of them might own the property, um, commercial property, and they might have a need a loan every 3 or 5 years or 7 years. They refi their loan. Okay, so that we also have that, and then this number 6 here is I will go most of the time if I talk to business owner, this number 6 is this where I would bring it up, when I talk to business owner. Oh, Mr. and Mrs. Owner, how many employees you have? Oh, I have 50 employees. If you come across a business owner, 50 employees. So quickly, I would take the number 50 and I bring out a calculator, maybe right in front of their face, and I go 50, but I don't, show them. I'm just kind of like doing my own thing, and I times 600, that's 30 grand, 30,000. Oh, do you know that your business, I know of a program that can bring back 30,000 back to your bank account every year. Would you like to know about that program? Right? Again, remember I didn't say anything about health efficiency or payroll tax deduction and so on, because I learned from the mistake that I made is I'm get so excited about this program and I'm blah blah blah, to blurt it out to the business owner, and guess what? They know about it, they talk to the human resource and they do their own thing, and you out of the loop. And and we are here, we are not a charity or nonprofit company, right? Or a consultant. So I would say just that. I know of the program that helped to bring back at least $30,000 back into your bank account. Are you interested in it? And then we'll set up the appointment. Let the expert come on in and help you to close a deal. And if they say, most of them I say, one thing I tell you, I promise you it won't waste your time. And how long is the appointment? Just 15 minutes, 15 to 30 minutes of your time with one of our, expert. Even though you are the expert on this, I'm just saying, hey, I refer to that. So that way I can set up the appointment. Set up the appointment is very important because the specialists know how to go over with them and lock them in, right? So this right here, next year is my, you know, uh, uh, 30 years in the financial business. And all I know is just like life insurance and, annuity and tax and stuff. But I don't know about anything about health. No one teach me ever. So that's why um, I'm kind of disappointed on that. But hey, never too late, right? So because health, we get paid, I love the word PEPM, PEPM. So anyone can help me to what is that abbreviation means? Jim, what's PEPM? Jim Quinn, how are you?
Hello, Andrew. Okay, I'm just
Hey, how
getting
are
on
you,
again.
Mike? my partner.
What's Pepum?
Yes.
Per employee per month.
Wow. Voila. Yes. So you get paid. I mean, any business, how you get paid per employee per month. So let the expert do the work and then you get paid, you know. So we pay out to the grid is $30 and depend on your level and such. So that you will talk to your managers on that, okay? But it's very I'm just saying, let's say just $10. Okay. So if it's 100 employees, that company, you help a company with 100 employees. By the way, you don't need a license to do this though. Okay, help efficiency, you don't need a license. And then 100, you multiply just $10. That's a 1,000 a month. Okay. So go figure that out. So I was you, I'm right now, even within the company, we're like grabbing as much as business owner as we can. Okay. So the more under you, the more business owner enroll or into this plan under your belt, you'll 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 be filthy rich, right? So this is where most of my time is dealing with business owner. I don't mind. I can go down the road or you can go to ChatGPT and ask them, put in 100 employees company around, Westminster, California, or Newport Beach, California, or Seattle, Washington. They will give you a whole list and give me the phone number and email. And obviously, again, call them or connect with them, because pretty sure if you mass email out and blah 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 blah, like I said, it's not gonna be that effective. Is it easy to do this? No. Okay. You know, I heard long ago there's a uh saying that if it's easy, all the lazy people already done it already. No, it's not easy. But if you know how to do it, you know, it's quite uh lucrative. So learn how to be. That's why we do do the training like this. And then right after that, we can come in and help them to convert them or help them to reduce their group health insurance. And again, we have a company that we work with, and we have a specialist of doing that very effectively, because they know how to dealing with directly with the pharmaceutical company, yada yada yada, about reduce their pricing, and even the government try to access to that and reduce all the costs and stuff. And we are very good at it. So for that, the group health right after that, and obviously we do offer individual in health insurance as well. So if some of you as a client or consultant on here want to know more, then get with us and we'll get you appointed. And this is my next favorite tax credit research and development, because I this morning Mike Hinsvard was talking, training and presenting, and say we the company that want to focus in the blue ocean. We don't want to dealing with the red ocean. If you know what I mean, what's in business, when we call blue ocean, what does that mean, Gina? Gina, is it okay I pick on you?
Sure.
Yeah. So what do you mean in business? Say, stay away from red ocean, go to the blue ocean. What does that mean?
Lots of opportunity.
Yeah, and the blue ocean meaning that nobody doing it. Okay. No competitor, what I mean. Okay. You want to go to the pond fishing with 1,000 people around, or you want just go to the pond that all by yourself, poop, you know, and fish. You see? So because it's in the field that again we call it a unicorn or black swan, you know. It's very um some of us know that even some city or some state there's more realtor than than customer. How are you going to compete with that? I'm not saying that, don't be a realtor, but but there's many niches that you can go in and make a boatload of money on this. So research and development is because uh, most company they don't know, even CPA. And if some of you on the Wednesday training on tax or ER3 plan, we discuss about tax stuff. Um, there's a company with 50 CPA gonna be need to be trained with us, you know. So that telling you that it doesn't mean that they know, okay? So that's why they don't um take their time. I heard that there's like 5,000 or more IRS tax credit code on there. Which one is which, right? So we have a specialist on this and doing very, very well. So if you ask me, the health efficiency and this, and by the way, research and development tax credit, no license needed. So those of you like, oh, I don't want to study, get licensed, this and that, there's no excuse here, right? And when it dealing with business owner, this is their merchant account is I would say the top of their list because they paying fees every month. So and we promise them that we will give them a good rate or good discount on this. Okay. And some of you, if you don't know what it is, it's a merchant services that when they accept credit card and they have to pay a fee. So we have that for every business owners that accept credits. So that being said, if you just want a referral, then just refer to us and get $200, referral fee. That's it. But if you want to become a merchant services consultant on this, we will train you how to do it, and you get earned on your monthly residual payout every month on this. So this I love residual, um, you know, like passive income because we have account that was 10 years ago or even more, like 2009 when I started, and they still with me until this day. Okay. And I did, one-time work. Obviously, yes, we have to maintain the account, blah, 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 right? Every time we have 24 hours customer service to take care of them, but sometimes they're still calling you, then you just answer them. Or, if you do big volume, you have hundreds of or more, merchant account, then you should have a secretary that handle that for you and thing like that. Okay, so merchant services is a good talking point when you bring it up with the uh, business owners. And then every business owner, depend on what uh, business they might have used. We are working with the resiliency system company that I know that Don have a conference today, so he asked me to kind of like mention this. So basically, we do have solar and reduce the electric bill, the electric cost for business owner or even for residential. That way they get more money coming back in, right? I heard that for residential, don't quote me on this, but I think this is the last year that we'll get the incentive. If some of you up to date, you can put on the chat. But I know that for 7,500 on the solar, will be over after this year. So some of you need it, or you know someone need it, get to them right away, get the electric bill statement and send it in to us. And then we have the specialist and analyze it and then give it back to them, whether they want to lease it or they want to buy it outright. Okay. And same thing with water. We have a water vial that can basically measure the correct amount, of water coming through their pipe, and therefore they can accurately pay for their water bill. I haven't have any account coming in yet, but I'm working on it. But the company said that it will save from 15 to 20% to their water bill by using this water vial. And electric, they have another device of doing measuring, for the electric bill saving as well. So these are the things that you just need to know, and then refer it to the specialist. And again, no license on this. And the ER3, I will save this incredible for the high earner, like 500,000 or more, would be very, very good for them. And I just leave this for Sheldon to train you on this or to talk about this. And then we do have a program called Smart Accelerating Mortgage Program. Basically, in a nutshell, if you have a mortgage and we can help you to reduce the down to pay it off in 5 years, averaging, depend on your financial situation, but it will the qualification is you need to have FICO score 660 and above. There's three qualification on this. And then the secondly is your property has to be 20%, have 20% equity or more. That's two. And then the last one is debt to income ratio has to be 43% or less. So what is that? What do I mean by that? For example, if you make 10,000 a month, 4,300, that means 43% is paying toward fixed expense. Okay, that's debt. That it's called fixed expense. Fixed expense different from living expense. So fixed expense is four major uh, um, um, is for major expense is first thing is, of course, your mortgage. The second one is your student loan. If you have student loan, some of you, oh, I don't have student loan, then that's good for you. And then the car loan, some of you, I talked to one of the client yesterday and said, nope, I don't have student loan. I don't have car loan. I pay off my car. So he left off with the mortgage and he didn't have any credit card. So the third one is credit card payment. You have to pay to credit card debts. So those are four major things, have to be lower than 43%. And then the bank will qualify you to put you into this, what I call SAM program, or Smart Accelerated Mortgage Program. Okay. So the client saved the client a tons of interest. So instead of go 30 years, they pay a lot of interest on that. By the way, you don't need a license to do this, and you get paid, quite good on this as a referral. Okay. And for this. And then my favorite right now, all of a sudden, starting July, this thing, it just helped the business explode, because in terms of, we all in our business, we need to have a called client database, right? And the best way is, I'm using the car insurance saving program, is the Good Driver, uh, um, Good Driver Mutuality program. It's just incredible. Uh, some of you think, it's just like, if some people, I don't know, is Frank on here? But Frank is only like, he pay only like $200 for comprehensive and collision. So he only pay $40. Like 20% of that is $40, and it save him $160 potentially after 6 months. And then he go, oh, it's just so little, I don't care. Yeah, it's true. Okay. But some money is better than none. That's first thing. Second thing is, you might be, for you, it's just a little thing, but for other people, like yesterday, a family came in to our office, and we'd be able to save them like 1,400, every 6 months. They are just jump to joy. Okay. They that you have no idea. So that's why I love to, when I share that and I save that money and I move it into, set up another account for them, another, term insurance for them that they don't have, like they can't afford, or maybe another saving IUL or private banking that we talked earlier about. So guys, and you don't need license to do this. Okay. So, and this one is paying, interesting enough, is paying, I call it daily progressive passive residual income. So, because every day, every client refer, and this program is, when allow somebody refer somebody, and that person refers somebody else, and the other person refers somebody else, and you keep getting paid also. It just, my blowing on me on this one. So it helped a lot. So if some of you find it, or don't understand it, or find out, okay, don't miss the boat. I'm telling you. So currently, right now, the company just like 1 year shy, and estimate value is about over 500 millions. That is from the company told me. Okay. So it just, amazing. So, and then again, we do serve, or we do have teaching people on the tax-free retirement account, many ways on that. One of them for the business owner, um, um, is they can take advantage of the program that we have. It's called Premium Finance. So, Uncle Tree Shaker, if you can, okay, to unmute, or anyone here take a shot at what is Premium Finance. What I mean by that. What is this program? Anybody heard about this program?
We're gonna let Sheldon answer that one.
Oh, Sheldon, he already know. So, so, but yeah, okay, Sheldon, you want to take a shot? You,
Shot at premium financing?
yes, uh-huh.
Oh, you're talking about when there is a group and individual tax-free retirement. You're talking about the premium financing on the life insurance, right?
There you go. I knew
Yes.
that. Yeah, yep.
Yeah.
So basically, the business owner that they don't have to use their own money. The banks will loan them the money and pay for it because they have a business, and so and contribute toward their what I call is cash value life insurance, either whether it's an IUL or a whole life, or I call it, guaranteed cash value whole life, because whole life now is just changing drastically. So it's not like an old day that just regular. You contribute the money now, and hopefully that money will grow with a certain percent, 4 or 5%, and hopefully it will keep up paying off your whole life, for life insurance for the rest of your life. No, it has dividend and all that stuff built in, and on and on. Um, so yes, uh, we have the program that the bank will come in, so they contribute 3/4 of the amount. So let's say you, your net worth is 10 millions, and in death benefit, because your net worth is 10 million, so you protect the net worth, then you have to get a life insurance at least about 10 million or more. So I would say 10 million in death benefit, because that's how much it was. I don't know who will cover life insurance for Elon Musk. He was almost a trillion. So anyway, but I don't know how much is that premium will cost if Elon wanna buy $1 trillion death benefit. So in other words, that when he passed away, you get that benefit, right? So that would be a crazy amount. But let's say 10 million in death benefit, so someone would pay very big amount, 250,000 or even more a year, or 500,000 a year or whatever. So instead of using 500,000 to pay a year to pay for that policy, the bank will come in, the client only pay 1/3 of that. I mean, 1/4 of that. So the client gonna pay 1/4 of the premium. The other 3/4 of the premium, the bank will put in, and then through time, of course, bank, they want to charge on the interest, but it will out growth, the money by the time that and they have to keep it growing in 15 years average time frame in order for it to work. So anyway, in other words, that we do have this, whether for group or individual, they can participate in this. Okay. What's the book called? Tax-free retirement. What's his name? But anyway, so talk about that. Okay. And then again, we have a rollover plan to annuities, and I'm this one right here is a lot of people are needed for individual that they have 401k, 18 annuities right now offering, and I'm pretty sure they're gonna, I never seen ever this high of benefit bonus before. So what I mean is, if you have 100,000 to in for your 401k and you roll over to index annuities, and you get 50% benefit bonus, that means you roll over immediately, you got $150 right away. But that I will explain later on how that works, but it will, for your lifetime income, activation. So it's incredible. So, and then we do have, offer living trust, irrevocable trust. So, to protect many, I got the most call on this part right here. Oh, I have 2 or 3 property. What do I do? And I'm approaching my retirement age. What do I do with this? Or I'm planning to give away to my kid, and I'm kind of scared. I don't know if they might get it and blow it. This is my entire asset and my entire life, and some, from the father or the grandfather inherited, so they don't want to blow it. So how do they do it? So they need to set up these type of asset protection, irrevocable trust, different from living trust. Living trust, again, in a nutshell, is only as good as when you're dead. So that living trust, it just avoid probate. That's it. Okay. So some people go around and say, oh, let me do your living trust because it's gonna it's an asset protection. No, it's not. It just skip the court, the probate, and it transferred over when you die. But what happened when you're still alive and you drive down the street and you have all these, you have your business, you have your properties, you have a lot of asset, and you drive down the street, accidentally you run into a bicycle guy, broke his legs or whatever, go to the hospital for a week, 300 grand. Okay, there you go. He gonna sue you, and then you go to court. The court gonna say, hey, pay this guy 300 grand. Sell that house or take out that money from your living trust, pay him. So, guys, everyone at least should have living trust. But if you have asset built up for entire life now, don't take it lightly. Check in with how to set up the asset protection. Okay. And last but not least, here is very quite often we never talk about it because every business owner have to have a group of attorney behind them, to like they have to have the law on their side, because if you have a restaurant that day, I don't know what, customer come in, boom, get sick from the food or something, there you go. You need an attorney to deal with that. So that being said, and it's only for a buck or a buck 50, something like that, to get enrolled into a plan. So if things happen, could save them a tons of money. Okay, if you don't have an attorney, you're in big trouble. So on that, I'm done sharing. So this hopefully every Wednesday, I'm gonna go down the list here and pick which one to, and then invite a specialist on and go over in detail for you to know. You don't have to be an expert, but if you inspire, if you love, help efficiency, and you want to be like a specialist on this, yes, we want to train you on that. So that we are at the top of the hour of the time. So I'm handing back to if you don't have any questions for me on this list. So this is where we work with business owner. I go down this list. Do you need this? Do you have private banking? What's that? Okay, let's, I need that. Oh, definitely I want to eliminate debts. Or I want this. Oh, yeah, I have business insurance already. That's fine. Or we go down the checklist, and whatever they need, we provide the solution. Okay? Because no one, if you come across with someone and they smell you as a salesperson, they're gonna run away.
What do we call that, Andrew? What do we call that? A what?
And we are not a jag.
Right. Because if you smell like you're trying to make a sale
There you
and
go.
you're just a salesperson, you're a what? Jag.
You are a jag. Yeah. How you imagine? I couldn't imagine how many call the business owner gets a day. Someone try to sell them something. They're tired of it. But when they see you as a consultant, they solve their problem. Trust me, they will stick with you forever. So be that, I call trusted consultant. Okay. And with us is a Black Swan trusted consultant. Okay, so talk about Black Swan. Nobody have any question on this? I'm gonna bring up my partner, and if Mike is on here yet. Oh, Mike, there you go. It's your I missed you last week, Mike. And I know you cruising. I don't want to bother. Okay. And today I saw that I'll be on that Alaska cruise. Okay? I just talked to my wife this morning. So she say, "Wow, okay." So so anyway, learn a lot from this person, my mentor, and he just I like about him is just his heart is just helping all of us on here. So Mike, take it over, and I'll give
Thank
you
you.
the host.
Hey, I love this list. Okay. I mean, you guys, the easiest sale you'll ever make will be a secondary sale. So once you establish a relationship with the business owner and you help them and they realize it, then you just can continue to go down the list, because why would they want you to help them in more areas? You've proven yourself. That's another reason why it's smart to recruit people who have business owners already as their clients, because their script is, I got something you've got to see. That's all they got to say, because they're already their clients. So I think, having a great portfolio of products like Andrew just went over that can help you, help serve business owners better and create a win-win, the better off you are. And so that's very impressive. The one that I kind of just fell in love with is the payroll tax savings. So I do think it makes sense to get in your foot in the door with a product that doesn't cost money, where you're not asking them to come out of pocket. Let's just say that there would be a little bit, tiny bit, higher level of difficulty if they have to, budget it into their budget. Whereas our, tax credits is free money, payroll tax savings is free money. That's even, you guys, there's a difference between free money and saving them money. The next best thing would be saving them money, cutting the cost. But you got to understand that giving them money is even better than saving them money. Okay. On an R&D tax credit, you're not saving them money off the, we're not getting them more R&D tax credit than they were already getting. They weren't getting it at all, right? And payroll tax savings, they weren't getting it at all. So the best products to lead with are the ones that are giving them money, literally. That's your best foot in the door. And then it's saving them money, right? Products that cut their costs, like the energy, the water, all of those products. And then, of course, the products that do cost money, but they should have anyway, right? And so, but once you've established and proven yourself with any of the products, you should go with that. Now, I think that I used to tell people, go with the product that you're the most passionate about, right? Because you'll speak differently. Your energy will be different. If you're selling a product just to make a buck, people can tell. But if you're selling something that you truly believe in, it comes through in your tone of voice, body language, eye contact. And by the way, all of that even comes through on a Zoom, right? And so, everyone knows I'm like Mr. Quantum because it is my favorite product. But you know what? Doesn't mean I don't love all the other products. And I don't sometimes think, hey, is R&D better or whatever, right? They're all good. There is not really, one's not better than the other. They're all good, okay? And so helping a client is what matters, you guys. And basically, the products where there's no competition, the blue ocean, are better than the ones where there's a lot of competition, right? So you got to, rank them in that regard. Then you look at the ones where you could make a big, giant, fat enterprise level sale. Some products don't lend themselves to where you could retire on one sale, like you could with potentially, one of these quantum plans or even an R&D. You could retire. You guys, it's possible to retire on one sale. Ed Pratt on my team did a $30 million R&D for an aerospace company, and I would have never called an aerospace company because I would have assumed they already had it, right? But you can't assume. So, you just never know. So today I just want to talk to you about the one I'm the most passionate and excited about. But I'm honestly, I believe in helping people with all the different products. Now, one of the things that makes this so cool is you don't need a license, okay? And, you don't have to pay to market it. And it pays forever. There's downsides to it too. Mike, what would you say the downside is? I would tell you that it takes 3 or 4 months before you're going to get your first check, even when you get an interested client. There's a lag. So most of us have to have other products because you got to bridge that gap, right? You can't just be quantum because it takes 3 or 4 months to start getting paid. Now, once you start getting paid, it never goes away, which is great. But that's why another reason to be diversified and to pay attention. You could make that list that Andrew just showed, and you could rank it in like 6 or 7 different ways. Do you need a license? Is it giving them free money? Is it saving them money? Is it a blue ocean? Is it a red ocean? You could rank them all for different things, but the bottom line is just get in there with a product that doesn't require them to come out of pocket and you're passionate about, right? And then, Mark Bierman actually taught me like the best, a line that I just love, how he diversifies after he does gold for them, where he said, I'm not finished with you yet. It's such a confident line. Hey, I just helped you increase your profit margins because gold saves them money. What's funny, you guys? Energy saves 10 to 40%. Group health saves 10 to 40%. Gold saves 10 to 40%. And you guys, and so does Stream PC. They all coincidentally are like the same, 40%, 10 to 40% savings. It's still not as good as me handing you $1 million R&D tax credit or a $250,000 a year payroll tax savings, because that's not saving you money. That's giving you money you didn't even know you had, right? But hey, I'm not finished with you yet. I got other great programs where I'm going to save you a fortune, and you're going to want to hear about these. Now, one big mistake you could make is trying to sell 17 products all at the same time, and then you'll end up with 0, right? So get get your foot in the door, help them with the product you're passionate about, and then tell them you're not finished with them yet, and take them through a series of products. Don't try to do too many at the same time. I really believe in one at a time, okay? Maybe two, because quantum takes so damn long. If they qualified for R&D, I'd probably get there after I did their census and all that, during their enrollment or something like that. But I get somebody on the hook very far down the road before I would go for like multiple sales at the same time. Now, you guys, this is quantum on one slide. This is quantum in a nutshell. 600 to 900 for the employer, zero cost benefits. It's easy to say it that way. Of course, it's better than zero cost, right? Because they're actually netting an extra $100 or so, maybe a little less, maybe a little more, 80 to 120 in their take-home pay, right? But zero cost benefits, 600 to 900 for the employer, fully insured, nationwide approval, but the only product approved in all 50 states, and has better benefits, higher savings, more employees, lower fees. I was on the cruise, you guys, and Robert, he's a big Dodger fan, by the way. In tonight's Game 7 of the World Series last night. I'm not a big sports fan, but I watched the World Series, right? So I was watching the World Series, and last night was really exciting at the end, okay? Because they had the tying run on second base to win the whole World Series. The Blue Jays are from Canada, so it's kind of like Canada against the U.S., okay? But people hate the Dodgers so much that they're probably rooting for Canada. Okay, the Blue Jays, some of them. But I'll tell you what, I was with last night. I just got to finish that story. So there's two runners on, one out. You're like, damn, if that guy gets a hit, it's going to be a tie game, and then bottom of the ninth inning. It's pretty exciting. And instead, he gets a great hit, but the left fielder was playing it right and was just charging in, and not only caught it, which was really great because it wasn't like an easy pop-up. But then he threw the guy out at second base because he'd already started running to third, and the game was over, and it was like, wow, that was pretty damn exciting. And the Dodgers won. So tonight, just so you know, it's Game 7 of the World Series in Canada, and it's Dodgers against at 5:00 if you want to check that out. But Robert came up to me. And he was wearing a Dodgers hat and a Dodgers jersey on the cruise ship, okay, because there was the World Series had started on the cruise. And so he said, Mike, I went to a business owner, and I said that he knew this guy. He said, I got a program that can save you 600 to 900 per employee on your payroll taxes. And the guy said, I want to hear about that. I want to know about that. And I was like, you guys, it is that simple. That's like quantum in a nutshell. I got a program that can save you 600 to 900 per employee in FICA taxes. What does a business owner say? I'd like to hear about that. Why you guys? So he just summed it up with, I was like, man, that is the best line ever, right? That's the bottom line, you guys. They're not doing it. Now, they're justifying it with the great benefits, zero cost to the employees. They net, all that's important, nationwide approval. Of course, all of that matters. But the bottom line, the decision is like, damn, if I have 100 employees, and you're going to save me $7,975 a month, 4,000 every pay cycle extra for me, and my bottom line, my profit margin is going to go up by. That's what Mark Bierman always says: increase your profit margins, which is a good one for you and me to incorporate. Okay, I'm going to show you a way to increase your profit margins. Okay, makes you sound smart. Okay, and so $79.75 a month for 100 employees. Now, you guys, there's a bunch of slides on quantum. Not this one, not this one, not this one, not this one, not this slide, but this slide is why they do it. Back to that 600 to 900, right? So that's why we say, if they've got you to, they sent you to human resources. Human resources is looking at this list of benefits going, we already have a bunch of those. And I'm not getting 8,000 a month extra. I'm getting 100 a month extra. I'm not, it's not that exciting to me as as it is to the business owner. So that's why we say human resources where good ideas go to die. Okay. By the way, I told that to an Aflac guy, a big superstar in Aflac. Okay, big regional manager for 25 years. He's joining our company, and he says Aflac doesn't like this product. No crap, Sherlock. Okay, Aflac's it's like competition that blows them out of the water. It's basically most of their benefits for free. Okay, so but he liked it. He's not dumb. He's not following for the line. Aflac wrote a big article, saying how they're not good because Aflac competes with it, right? That's totally biased. And so it's like Transamerica writing an article why Nationwide isn't good. Okay, it's like, hey, take it with a huge grain of salt. But this guy, here's what he said. He goes, you're right about human resources. He goes, and he told me even a better line about human resources. He said, human resources people don't even have the authority to say yes. The only authority they have is to say no. So you're presenting to someone where they can't go, yeah, we're going to go with it. They can advise, say it's okay, but they're not gonna probably. They can't even say yes. He's all, you're right. Aflac people don't want to present to them either. Okay, and so here's 100. Why this new slide's so much better than the old slide? Because the old slide doesn't show the monthly. And that's a mistake, right? It's not showing the monthly because the monthly is what they're going, damn, that would have helped me last month, or that'll help me next month. How quickly can we get this up and running, right? And so it's pretty exciting stuff, okay, on here. And this shows the monthly and the annual on 100. Now, this is super important because people really think this sounds too good to be true. And so we have to raise the objection, even before they do. And this is the answer to that objection. It sounds too good to be true, but actually it was an amendment to the Affordable Care Act in 2014. These didn't exist prior to 2014. And the amendment allowed employers to offer financial incentives to employees who participate in certain wellness activities. You guys, and I do read the next line: health risk assessment, biometric screening, quitting smoking, weight loss, and other preventative activities. And that answers that overcomes that objection. They're like, okay, this was an amendment to the Affordable Care Act. Then I do go through the benefits. They are really great, but a health insurance agent will just rave and spend way too much time on how great the health benefits are, losing sight of the fact that this is why that 90% of their decision, or 95%, is going to be based on this slide, not this slide. But this slide's important to help justify it. The cash indemnity benefits are great, $1,000 a day for 30 days. Member Capstone was 100 after the first day. 1,100 drugs. Member Capstone was 37. Champ is 200. Champ doesn't even have cash indemnity benefits. Champ is self-insured, so is Capstone. This is fully insured. 500 for the emergency room, 500 for the ambulance, 1,000 for a surgery, 1,000 for an accident, 400 anesthesia, 2,500 critical illness. Money mailed from the insurance company to the employee's home 8 days after they take a picture of the bill. You know why I say that? Because the business doesn't want to hassle with it, right? They just want to pass it off. The insurance company handles all of it. Not taxable. The income's not taxed. They don't get a 1099. The prescription drug, 1,100 drugs, and telemedicine for the whole family, anyone related that lives under the same roof. That's a great, you guys, 50% of people don't even sign up for their group health plans at work because of the premiums are out of this world. Or, there's other reasons, right? Their wife has on their other spouse's policy, or maybe they're over 65, they're on Medicare. There's different reasons, but guess what? None of that matters. Everyone qualifies for this, whether they're 69 years old or whether they're 18. Everybody qualifies. And they all get the prescription drug plan and the telemedicine for the whole family. And it's great because this plan is so much better than nothing. Virtual veterinary care for the pets, cats, dogs, horses, and more. Yesterday, I was doing it for a company in Wyoming. So they probably, care more about horses than people in LA, okay? Or in some areas, okay? Because a lot of them have horses. Okay, and then Zig Ziglar coaching. That's a good one. You know why? Because 6 one-on-one coaching sessions a year is $600. And they don't have to use it for health and wellness. They could use it instead for personal development. It's up to them. And then, of course, the wellness plan, the video, watch a video, read a 2-page article. And then they have a registered email that covers all the bases. Now, you guys, let me ask a question. Can I tell, if I send you a PDF article, can I tell if you read it or not? If you open that email, can I tell if you read it or not? Do I have like an eye scanner that's watching your eyes and measures how long your eyes scan that document? No, there's no such thing. I mean, there probably is such a thing, but you know what? You guys, we got this whole thing covered. Now the employee's check goes up. I'm not going to get into the nitty gritty. They take out 15, that was taxed, put back 12 that's not taxed, lowers their taxes by $396 a month. The difference was $300, so their check goes up by $96 a month. The employee's happy because their take-home pay was increased. Boom, end of story. That's awesome. An extra $100 of my employees' checks. But if they have 1,000 employees, you guys, we did another appointment this week that went really, really well with attorney to attorney. 14,000 employees. I haven't even done the calculator yet on. but Brad Renzelman helped do it. And he's all, Mike, it went really well. Okay. I just want to bring you up to speed. Okay. So thank you for bringing me up to speed on that. Okay. And so, but you guys, you know what the secret to that story is? Build a team. Build a team. By the way, Stan, that was on your team, just so you know. Congratulations. It went really well, but it's not finished yet. But that would trickle into your check. Okay, now here's the deal. You got 10,000 employees, so it's bigger than that one. This one pays 120 to 180,000 a month, and it was bigger than that. You guys, the overrides are on 10,000 employees are incredible, right? It's insane.
Mike, Gina has a question. Can you answer a minute?
Yeah.
Please go over what the compensation is for the agents, just on that, just on the quantum.
That's the only one I do cover, by the way. $12 to $18 per employee per month. And so if you have 100 employees, it's 1,200, right? Is that, yeah, God dang, that's pretty good. 1,200, you got to get 700 to get to 1,350. You got to get 1,400 employees to get to 15, and you got to get 2,800 employees to get to 18. And then there's 6 generations of overrides. That's people at 18 over people at 18. So if it was a direct recruit, you get $3 plus $1.50, because everybody gets $1.50 on their directs. No matter what they're at and what you're at, you always, if you hired the person who lands a deal, you're going to get $1.50 per employee, no matter what. But if they earned 18 and you were at 18, you're both agency partners, you get the $1.50 plus the $3. So really, first generation is $4.50. Then second generation is actually, it's $1.20. So this is wrong. Oh no, $1.50, $1.40. Okay, so it's a, and then we just showed there's 6 generations, but I couldn't fit it on the calculator. So it goes 90, 60, and 30 cents. But you guys, even 30 cents adds up over time. So there's 6 generations of overrides. These kick in on when you're an agency partner and you have an agency partner. That's when generations kick in. Prior to that, if you're at 18 and your agent's at 12, and let's say you didn't hire them, somebody else getting the $1.50, you get the difference. Even if you're at 15 and your agent's at 12, you're going to get the difference, $3. But if you recruited them, you're going to get the $3 plus the $1.50. They're your direct. And if you're at $13.50 and your recruit's at 12, they make the sale, you still get the $1.50. and plus another if they were your recruit. Does that answer your question?
Yes, it does. Thank you very much.
Okay, and I think you guys at Quantum has like the easiest compensation to understand. Actually, now it's actually a percentage, you guys. So there's $30 goes into the grid, and this is 40% of $30. This is 45% of $30. This is 50% of $30. 30 divided by 2. This is 60% of $30. The first generation is 10%, which is $3, right? So it's actually a percentage, but we're telling it to you in PEPM language so you can better understand it. Now, here, and you guys, it's super lucrative, and so are overrides in it. And so here's a hospital, 396 employees, a real client of theirs. But you guys, the crazy part is you'd make about 70,000 a year or 5,700 a month on a case like this. You guys, it's 1.4. It's a $1.4 million annuity. It's crazy. One sale like this, for you to have that in passive income, you'd have to put 1.4 million in an annuity with Andrew. Or, and so that's one sale. So really, you guys, you really could look at it like this is a $1.4 million commission, because this, you guys, probably one of the smartest things you could do with 1.4 million would be put it in a lifetime annuity of 5%. Okay. Obviously, there's other things you could do with it, but that's what that equals. And then this one, 2,200 is like, oh my God, 40,000 a month, 40,000 a month. You guys, it's crazy, medical association. And then here's just like, you didn't just win the lottery, because remember, the lottery can be a lot less. This is 408,000 a month. So you guys, that guy, by the way, Stan, he's on your team. 14,000. Let's do 14,000 real quick, you guys. 14,000.
And I get $1.50, right? Or 30 cents?
But somewhere between 30 and $1.50. Okay. You're probably higher. You're probably up in the dollar range. So 14,000 a month override. Okay. But he might get 252,000 a month. You guys.
Why I couldn't sleep with 1,000 employee a month, or already.
Yeah. You guys, you should, if you can't be comfortable on that, okay, you're doing your Art Williams used to say, you're running your finances wrong, right? And so you should be a tightwad, right? Art Williams used to have a great line. Here's what he said: if your friends don't accuse you of being a tightwad, he said, at least in a joking fashion, then you're probably not running your finances correctly. And I thought that's really good advice. So it's like, hey, you should be able to retire on 1,000, but at 252,000, my friend Blumenkemper, you guys, he was making like 350 a month consistently, 350,000. And 1 month, the check went down to 275. And he told me as a friend, he said, Mike, my wife got upset this month. My wife's worried. He goes, because our check went down to 275,000. And we just start laughing because we're like, George, she's worried that you're making 275,000. She's like, we're always over 300. How did it go under 300? And he, as to me and Ron, we're thinking, hey, it's 275. What are you worried about? And then of course the next month it went right back to 350. Okay, but we were just laughing at how life is when you're making that kind of money per month. He also told me after they sold the company, he got a check for 30 million and they cut off his income and he had to pay the tax on that. Even though he lives in Texas, he didn't have to pay state tax. He told me, Mike, I now have to budget my money, and he didn't budget before. He goes, but now I have to be on a budget because they're just siphoning off a nest egg. It's not as comfortable as it was when it was just 350, 325, 275, 350. Then he was just like high on the hog. And so you guys, we are going to get there together with this product. And last thing is if they're not happy with their health insurance, and it says 60% of companies are looking to switch next year because of the high rates, that if you had a health license, that'll double or triple your income. And you don't have to do anything. You just have to get a health license because we're going to make sure that happens for you. Okay. And if it's possible, just figure maybe a third of the time will double or triple your income with the health plan. And it's also 100% renewal for life. But that's what I wanted to cover for you guys today on quantum. Any questions?
Any questions, you guys? Amazing,
Yes.
amazing.
Mike,
Yeah.
this is Sedora. I was trying to take a snapshot of that one slide that you had that showed the one that we should, show people instead of the one that lists everything. And I don't know, I did something.
I have a brochure that's really incredible, and you can give it to people. You have to be
Okay.
licensed to do the presentation. You have to have an insurance license to present, a health insurance license to present it. But you don't have to have a health license to get paid. You get paid the same whether you're licensed or not. But I have this great brochure that I will put right now in the chat. It's really, you guys, I love this brochure. It's new. And so put that brochure, you could use that. And it does have, you know what? I would, grab this slide. It doesn't have this slide in the brochure. Okay. So you do want to take a snapshot of this because it's not in the brochure. Okay,
This was the one you were showing earlier, and you said don't show people the one that has everything on it, but it was the one that you pulled out specifically. And I was trying to take a snapshot of it, and I knocked myself off the Zoom some kind of way.
But no, isn't this the one? Can you guys see it now?
Yeah.
That's my favorite slide right there. But let me put the thing in the chat for you guys.
Okay.
Now, by the way, if I'm presenting to a company with 5,000 employees, I show them the 10,000 slide, right? I will tweak it at the beginning so I don't sound, like I'm out of my league. Okay. And so hang on here. Okay, here's the brochure going in the chat, you guys.
All right. Anybody else, guys? And by the way, Mike, I think his wife is supposed to talk to my wife because she was just telling me that honey, make sure we're not selling drugs because money keep coming in. So I said, I'm worried. I'm worried about filing taxes. I said, don't worry about it.
Yeah, that's funny. It's you guys, it's a pretty amazing business. Now, I do believe in the principle of don't put all your eggs in one basket. And obviously that was, Andrew just went over 17 baskets, right? But, don't put all your eggs in one basket.
Nope.
Don't be a one-trick pony or a one-legged stool in a butt-kicking contest. So that's why we got to diversify.
Thank you. Thank you, sir. So the next one is next speaker is, man, I learned if anything, I learned a lot from this guy. He's brilliant. Like I said, if you ask me, who read the most books, I would, two names come up: Elon Musk and Sheldon Singleton. He sent me book after books and read this, read that, and so that being said, the master, Sheldon Singleton, come on.
All right. Hey, everybody. Sheldon Singleton here. Hey, I'm going to share something with you. Hey, Mike, that one gentleman that you were talking about, once he sold his business, I'm part of the Exit Planning Institute. And what we were talking about that at our gathering meeting on Monday, about how these business owners use their businesses as a lifestyle vehicle, and then they are not prepared when they exit, and then that's when they stress out because they're really good at creating cash flow, but once they sell their business, that's when the stress comes up because they have not really thought that plan out. So I'm going to share something with you guys, which is going to blow your mind right now from the Exit Planning Institute. And one of the things, what I'm about to share with you is going to show you how wide the market is for our services or our strategies to help businesses save money. Because again, the simple way we show businesses how to make money by saving money. So let me share with you something that was one of the presenters at EPI, Exit Planning Institute, was telling us about. So you all can, let me shrink this down. Okay, let me move this up. All right, so look at this. Look at this right here. Here is the opportunity for us. All right, this right here shows us $18.7 trillion in wealth of privately held businesses here in the United States. So look at the micro market, sales range $5 million or less, number of companies 5,580 companies, 93% of the 93.1% of the marketplace, $3.81 trillion in sales, and it's 10%. Now I want you to think about what we have, all the strategies we have. 93% of all the businesses, privately held businesses here in the United States, makes under $5 million. I want you to think about that one for a second with, what we're talking about. We'll bring in quantum, Section 125, research and development tax credits, the group health insurance. Yeah, think about those right there. The resiliency programs we have. Look at how many of these privately held business owners would be grateful for us to bring some of these strategies to them? And it's 93% of all the businesses here in the United States that we can help. Now, the lower the mid market, 5 million to 100 million, 390 companies, they make up 6.5%. And their sales is 6.71 trillion. And that percentage of wealth, 18%. So here's our target market. The reason and then you look at the upper mid market, $100 million greater, 26 companies, 0.4% of the wealth, sales in trillions, 26.85, and 72% of the $18.7 trillion in wealth. So when we look at the reason I bring this up to you, micro market, lower mid market, that is 99.6%. That is our target market. And Mike, here's something I didn't tell you about. After we had that quantum presentation, it was another agent that called me. She is with Champ. The one agent told her about quantum. She called me up. She texted me, hey, I want to talk to you about this other Champ alternative. And then I was busy that day. Then she called me. Hey, Sheldon, tell me about this. And I told her a little bit about it. Mike, she wants to come aboard. She wants to get this strategy and everything. So, when we have something unique, because she understands Champ, and I told her about quantum. I told her about what we get paid per Champ, because I told her, I said, primary reason I'm not talking about Champ is because I get paid $5. I said, starting over here where I'm at with the quantum, I get paid $12. And I said, I just more than doubled my pay. I said, why would I want to talk about Champ? And they're good programs, but quantum, like Mike was saying, it has a lot more benefits. And at the end of the day, what would they say? You got to, if the airplane is, decompressing, put your mask on first. I got to put my mask on first, my financial mask on first. So I want to share this with you all because this is the marketplace we got. I mean, this is a large pie right here. And that's what I learned at Exit Planning Institute. So now let me share with you I'm going to go over to and share with you the email that Stan sent out. How many people got Stan's email?
Yeah, most of us on here.
Okay. So here's what's happening right here. We're going to be having our client webinar on this coming Wednesday at 12 o'clock. And the reason I'm sharing this with you, put this out to as many people as you can, because this is our official agent launch. So we can get this out to the world because, the tax unicorn, I already got one of my guys on my team. He came from big time in the finance industry, financial services industry. He's all over it. He's made a website for it. He's made his commercials. He shared it with me. It will gather attention. He wants to flood the zone. He wants to drive so many clients. He always asks me this question. And I talked to Stan about this. He said, Sheldon, can they handle the volume? He says, can they handle the volume? And I said, they're prepared to handle the volume because he's so pumped up about this. So on Wednesday, November 5th, this Wednesday coming up, 12 noon, we want all of you who are on here, if you know any business owners, and again, the business owners can get on it. You can say, hey, here's a strategy. What you always heard me say, Mr. and Mrs. Business Owner, what if there was a strategy where you can turn your business risk into a tax deductible, tax-free, super funded retirement plan? Would you be opposed to learning about that? And you create a new tax deduction for yourself.
Can you repeat that script, please?
What if there, Mr. and Mrs. Business Owner, what if there was a strategy where you can turn your business risk into a super funded, tax-free retirement plan? Because I always tell them, because here's something we all know, and you can say this to them. We all know we have professional and business liability risk. And that's important because everybody's going to say, yes, we do. But I said, and I say this when I'm out networking, I said, the challenge is it's a tax deduction and we hope we never, ever use it. And the business owners, they go, yes. Everybody goes, yes, you're absolutely right. Because depending on what your industry is, if it triggers, it can be brand damage. They can drag you through a lawsuit. They can drag you through all these things. And you pray that you never trigger your professional and business liability risk. And I said, if you don't do it, it's a profit center for the insurance company. But what if there was a way, and I want you guys to think about this, put your own head in here. What if there was a way where you can turn your professional liability risk, this business professional and business liability insurance into a profit center for you? Then they're curious. Okay, you got me curious. Hey, we're going to be having this webinar right here. It's going to be Wednesday at 5 o'clock, not 5, Wednesday, I'm looking at the 5th, Wednesday, November 5th. It's going to be at 12 noon. And the creators of this unique strategy, because we all know that certain things you will never find out about certain things unless you are in the right network. Everybody knows that. So I know I shared a lot of that with you right there, but if you put your head on there, okay, here's the simple things. Every business and professional has business and professional risk. We're all paying out money. It's loss. It's an expense. We don't take it's just there for just in case. It's a profit center to the insurance company if we never use it. And what if we can make that a profit center for us? And then you got them hooked. Those are hooked words right there. And then whenever I use that, people say, here's my card. I want to find out more. I'm sitting down with a tax professional on Tuesday at 3:30. because he reached out to me, say, Sheldon, I want to hear more about what you're talking about. I'll sit down with him, and then I want to say, hey, the creators of the program are going to be happening this Wednesday. You can invite some potential clients to it. You can invite business owners you know about to this. So this right here, when you click on the link, this is how it looks. All right, can you guys see? Can everybody see this? You can still see the link with the risk mitigation with private reinsurance.
Yeah, can you click on it?
Okay, so let me share. Let me share it. Let me share it with you because it came up in another window. All right, this is the way it looks. And what we're going to do, we all are going to get on this and register for ourselves. And remember, this is a client only. This is not for a representative to get on there and start putting stuff in the chat since it's a webinar. How much I get paid? No, do not do this. This is client focused. So tell everybody, if you're inviting people on this, this is not a referral partner webinar. This is client focused only. We saved that for next Wednesday, not this Wednesday coming, not this, the following Wednesday coming up. That's when we bring on the referral partners or the representative webinar. That's the questions, what we can bring up on a Zoom. So this is client focused. And also I'm going back to, I'm going to close this window and going back to the email that Stan sent out. Okay, here's the screenshot. I'm going to open it up. Can you see that, Andrew? Did it pop up?
Yes.
Okay. I decide 247. This is for the I decide for the unicorn, the ER3. It's only for tomorrow because the last time something happened, we missed out on it. We couldn't get it. And this is it. This is what Stan worked out. I know the other price was lower, but this is the best Stan could get. So either you go 297 or you go 247. It's up to you. You guys can decide what you want to do. It's $50 off.
Uncle Stan, can you shake it by tomorrow for the same price? Some people ask.
He already tried. So it's either 297 or the monthly plan or 247. And here's the thing I think I'm going to show you now next. And make sure we get our rep agreements in. For all of you, get those rep agreements in and send it to Stefan so you can be in the system. Because again, it's tax planning season right now. And the reason we're launching this is because we want to get to people, get them in the pipeline before Thanksgiving. Because you know what happens after Thanksgiving? As soon as December 1st hits and the second week of December, people start shutting down. We want to get this in the pipeline because we're going to say, hey, we're going to give you, this is tax planning time right now, because we can get with the tax unicorn, it could be that 10% is average. It could be as little as 8%. It could be even maybe 20%. So think about it. Your tax planning, you just created a 20% tax, 8 to 20% new tax deduction. And that's why we want to get quantum. We want to get everything in the pipe. So this is us being race horses in the gate, waiting, itching to get out. This is go time. All right. And what I'm going to share with you next is the calculator. So we all like residual income. The quantum, Mike, that the one lady we talked to, I'm going to be telling her that if we get that company she'll get a minimum of $1,200 a month in residual income added to her health insurance. So that should make her very happy. So let me share with you the calculator.
Hey, Sheldon.
Yes.
Sheldon, before you do that,
Yes.
could you just, Mike and I had a conversation about how many businesses would qualify for the ER3 program.
Yes.
Could you tell us that number again? Under how many, what is it, million or whatever it was?
Oh,
it was 90%, right?
It was 93%. Yeah,
how much?
It was 93%. It was from less than 5 million to 100 million. It was 99.7% of the businesses privately held, these are privately held companies, qualify for the tax unicorn.
Okay,
Remember,
Mike Hinsvard, you asked me that question. You didn't think there was that many. Mr. Sheldon just gave you the number.
It
Okay.
doesn't make sense to me, the question. What do you mean the businesses qualify? I thought we sell it to people.
It's businesses. The tax unicorn is for the business. It's for the business owners, but it's the businesses $500,000 in gross revenue.
But is it an individual business, or could it be a group of people that own a business? Or
it could be a group of people that own privately held corporations.
But do they buy it as a group, or they could buy it or do they have to buy it individually?
The way it's designed is the business will pay for it, and the people will buy their sliver in their privately owned reinsurance company.
So like 10 owners of a company can all
buy their
do
shares.
The same one.
Yes.
Okay, I did not know that.
Yep.
I
Yes.
thought
That's why
like,
we have.
like
That's why we have Sheldon, Mike. Because listen, I'm the sales guy, the promotion guy. Sheldon digs into it, and he's found out stuff that I don't even know. So no, and that's cool. Remember, that's why we created that third level. It was for you. Okay.
No, I did not. I just thought it was only for individuals.
No, it's the business, because the business is the one that buys the privately owned reinsurance company. And because before the privately, let's say PORC, that's the privately owned reinsurance company, that originally was designed for businesses that, let's say $5 million and up. And it was only for the businesses with the privately owned reinsurance company would be additional tax deduction for the business. And at the end of the year, the excess premiums that are left in their privately owned reinsurance company stayed in the business's reinsurance company, and the businesses could use that premium, that cash from those premiums, as another line of credit. They wouldn't have to go out there and get a line of credit or go to a bank. They can actually, Mike, I want you to think about this. Be your own banker, because that concept, be your own banker.
Yes.
Think about it. That's what the business, the privately owned reinsurance company is it's the be your own banker. They call it the 831A, because at the end of the year, the business had all this money sitting in their privately owned reinsurance company, and they can buy equipment with it. They can do a lot of different things. But with this, that was ER2. But with ER3, this one right here brought the self-directed Roth IRA into it, where the money that was sitting in a privately owned reinsurance company of the business, because it's a $50,000 buy-in through your Roth IRA, it buys preferred stock. The preferred stock is the gateway to get the money out the privately owned reinsurance company is a dividend that goes into the Roth IRA. This is why it makes it so powerful. Because before with the original one, they call it 831A, it was only for the business by itself. Any money that came out of the 831A or the privately owned reinsurance company.
Sheldon, it's
831.
The original ER2 is still an 831A. It kind of mimicked an 831B. That's right. No, go ahead. Continue. You said it right.
Yep. And because the money that would come out the 831A to ER2, that would be taxable. They strategized and married the Roth IRA to it, because again, the insurance for the business is tax deductible, tax free. It's after tax money, and the dividend was the right. The dividend, when you buy I want you to think about this. At the end of the year, just like a mutual company issues preferred shares and issues dividends to their whole life. At the end of the year, whole life owners, they say, hey, this is what your dividend is going to be. Think about it this way. That's what happened with the privately owned reinsurance company for the business. At the end of the year, Alliance Reinsurance Company looks at the claims and expenses and says, hey, we got X amount of dollars in dividend left over. We're going to issue this as a dividend through your preferred stock that what your Roth IRA owns as a share in a privately owned reinsurance company. Therefore, that money goes through that preferred stock to your Roth IRA.
But so every business owner would have to have their own Roth IRA, right?
Correct.
Those are individual.
Yes, correct. Yep. That is absolutely correct. And
so would it actually be your own insurance company instead of be your own banker?
Yeah, I just use that as an example because most people know be your own banker, and I was just so you can understand the philosophy. So it's be your own reinsurance company. That's what this is. Own your own reinsurance company, because that's what Warren Buffett does. He has Gen Re. He's been doing that, and 92% of Fortune 500 companies do that too. So I'm gonna share with you the income real quick. Gina, do you still have a question?
I think Gina forgot to bring her hand down.
Okay, all right.
Exactly.
Okay, make sure that we show this third level when you make these examples, because I built it for somebody that's on this call. Okay.
All right. So here it is. All right, I have an example of, I'm just going to put 5 million right here in this example right here. This is 100 million right here. So I'm going to back it down. I'm going to leave it at 10 million. Okay, here's 10 million. It's still above it's still part of the 6%. All right, so 10 million is the average example we use. So Mike, look at this. What this means is the business is grossing $10 million. And we use, where the yellow is, we use an average of 10% because, when they looked at everything, Craig, they looked at it, they say it averages 10%. So this is an additional 10% deduction. And this business right here, after the actuary looked at it, said, we're going to create a privately owned reinsurance company for you where you can put $1 million a year into it. So that reduced, now their taxable income, their gross income is 9 million. Now this right here, they just turned $1 million into a profit center for their business. So at the end of the year, so right here, this is how much you would get paid if you found a business owner or a business that grossed $10 million a year with this example. Look at your first year. We go down here where it says total compensation to the primary referring agent. It would be 25 grand. That's how much you would get paid for year one for doing that. And what we do is we just tell the story and then refer it over to Stefan. And Stefan and Craig, they do the rest of the work, kind of like Quantum. They do the work. And then the next year will pay us $23,000 if they did not increase their premiums. So there's $23,000. So on level one, referral partner, you're the primary referral partner. Now you bring a person into the business and they do the same thing as you. They'll pay you $3,175 first year. And then after year one, they did the same thing. They'll pay you $3,093 every single year. They put money into it. And somebody asked me a question, why? Well, what if they would want to stop? I said they would lose a tax deduction. Why wouldn't they want to do this? And then at the end of the year, that money would go, the net premiums would go directly into their Roth IRA. I said it wouldn't. I would find ways to make this happen. That's my wife. Hold on real quick. Hold on.
Sheldon?
What did you say? Hold on real quick. I'm almost. Oh, were you about to?
I think Sheldon had to take a call, Gina. Gina, can you? I see your hand up again. We didn't know if you had a question or if you just forgot it.
Now I do have a question
Yeah,
because
okay.
I was asked by another agent. So I'm going to read the text that he sent, but I don't know if we have to wait for Sheldon to come back.
Oh, Sheldon's going to be back. He's going to be back in a minute. So why don't you read that off, and then it'll kind of give us something to calibrate and calculate. I'll answer it if I can. And Mr. Black Swan is our expert. We have Andrew too. So go ahead.
All right.
What's
Okay.
the
Yeah, what
question?
question do you have? If I can answer that.
He'll be
The
back in a minute.
question is, and I'm reading from the text. I'm wondering how the compensation described there gets to the 25,000 for a 10 million company. So I think that agent was wondering, to them, it seemed low.
Ah, okay.
All
So
right,
wanting to know about that. How
Stan,
does
you're
that
come to commission. You're the
Mhm.
expert on that.
Gee, thanks.
I said
okay, no,
that
we
he
have
should
the
contact
expert.
Stan. Yeah, I said contact Stan.
Okay, I'm back.
Expert has returned. Okay, so Gina has a question.
Yes.
One of our agents has a question for you, Mr. Black Swan. Go
Yes.
for it, Gina.
Wondering how the compensation described just what you read off about the 25,000 for a 10 million company. How is it that it's to them it seems like a low number? And I believe someone's asked that on one of the Zooms previously.
It seems like it's a 70-30 compensation because 70% is paid out to the field.
I want to answer just really quick. Remember
Yes.
the way we started this thing? Okay, remember that the writing representative was a little higher. Remember that? And then I was requested to change it. So maybe the writing consultant would make a little bit less and would pay the field a little bit more. That was the request that I had from Sheldon and other people. So Sheldon, you can take it away from there. Okay.
Yep.
Go ahead.
Because the original compensation, the writing agent would get 30,000. And then when you went to level 1, level 2, and level 3, it would be like $1,000. And I'm going to tell you, here's what people told me. They said, Sheldon, I'm not going to refer anybody. He said, they told me I'm going to do it all myself. And I got that from multiple people. So I said, okay, and I started thinking about it. I said, there's no incentive. The money was so little, there's no incentive to refer, to build an agency. So I said, Stan, let's look at this. Let's do a 75-25, 75% for the writing agent, because if you think about life insurance and everything, that is usually 60 to, they start off at 55, then they'll go 60, 75, 80%, depending on what agency is. So I said 75-25 is reasonable. We still make $25,000. And then you bring in a referral partner, you're gonna make $3,000 off of them. Level 2, you're gonna make $3,175 off of them in this example. And level 3, you'll make $1,587. And when somebody tells me that's a little bit low, I said, okay, what if you found 2 businesses, or you found like 2 businesses a month and you got paid 50 grand? Said $50,000 dropping into my bank account. I'm not crying. And then my referral partners, they do something, a $3,175 deposit hits my bank account. I'm going to be saying, where did that come from? Oh, that's nice. And
I think a lot of us will be smiling.
Yes, we're going to be smiling because I'm like, where did that's money that just dropped. Even $1,500 hit my bank account. I was like, wow. And imagine if, we get our agency, and here's one of the things what I'm sharing with people. and then I know we're a little bit over, and I want to respect everybody's time. During this initial launch, let us get clients in the pipe so we can have case studies for ourselves before we start recruiting the world. We want people chasing us. And the agents that I've connected and brought into it, I told them that let's see if we can get like um, 5 case studies for us, and the word gets out that Gina has this very unique program. You need to talk to her. The business owners will be coming to you. And then that's when the other financial professionals, it's like, hey, Gina, I heard you got this. Like, well, then you can be discerning. It's like, yeah, I got this. Let's sit down and talk. And then you can pick and choose, because we want you to be the first one out. Because I can tell you, if you get like a big firm, they get out there, you're going to be overshadowed. They're going to think it's their idea instead of you. They're going to come running to you first. And that's I said, again, at my age, I'm a little bit greedy because I want to get my name out first. Sheldon Singleton, Black Swan Business and Financial Strategist. He has these unique concepts, and I do have agents chasing me right now. I heard this, Sheldon. One guy chased me down. He kept calling me, Sheldon, Sheldon, Sheldon. I said, okay. And I shared it with him. He's like, oh my God, oh my God. And he said, I can see where I can make a lot of money from this. So then I said, okay, I'm letting a few of you in right now. And I said, let's get this thing going, get some case studies, and then let's run with it. And then we open the world up. How does that sound?
I think Gina likes that. Do you like that, Gina?
I do. Thank you.
Gina likes it, and Gina is tired of swimming in a red ocean. I think
Yes.
Gina wants to swim in a blue ocean, and everybody in the call should want to swim in a blue ocean, and that's what this is.
This is truly a blue ocean strategy. And I want to tell you this, and then I'll you have any questions, I'll answer it. And then I know it's, like I said, it's 10 after. When I told at the Exit Planning Institute, they're very high end attorneys. I mean, these are high end people. We're talking about they onboard families that have $300 million in net worth. I mentioned this strategy a little bit to them because they were talking about asset protection, and they did offshore domiciling, Nevis, they did Wyoming, they did Nevada. They were talking about asset protection. And I raised my hand. We're having a fireside chat. I said, hey, I want to ask this question. These guys have been in the industry for a long time. I said, have you ever heard of domiciling for asset protection in a Native American Indian tribe? And their heads popped up and they went, what? Both of them was like, huh? What? What are you talking about? That's interesting. I have never heard of anything like this before. And I'm just sitting right there. And then one of the guys said, well, yeah, that's intriguing. But what would scare me to death is, Native American tribes, they have new tribal leaders. And then what would happen is, what if the money got stuck and that we couldn't get to it? Well, last Wednesday, Craig answered that question. And here's what Craig said. He said, Sheldon, that is a great question. We get asked that all the time. He said, what we have is like a casino. When an Indian tribe has a casino, Yamava here in California, a lot of money flows into the Indian tribe from Yamava. They got compounds. He said, these Indian tribes, we have relationships that's been here for 20 years, and they don't want to lose this income stream, because that 1% is an income stream to the tribe. And they want to grow it as big as possible because that's a new income source. And he said, we have 5 other tribes lined up behind the tribe we got right now wanting to do it. So that's how unique this is, because when these high paid tax attorneys and financial professionals, they snap their heads, Gina. They're just like, huh? It just blew me away. And then I was smiling and I asked Craig about that. And that's what he told me. He said, we hear this all the time. So this is what we got so unique. So on Wednesday, it's the launch. Let's get that information out. Does everybody have the email? Is everybody on Stan's email list? For all of you who have people in your network, send this out to them too. And if you have agents, remember to tell them this is not an agent call. This is a client call. And we want to hear what the clients say and how they react to it. So do you have any questions?
I don't think we have a lot of questions, but I know Mr. Jim Quinn came on really quick. Sheldon, can you pull up your business card? We want to show that. Gina started to look at it a little bit. You got a couple of minutes?
Yeah, I can do that.
See your special business card. It's one of Jim Quinn's friends that we've been promoting because we think it's better. Sorry, Mike. We think it's better than the L card. Mike's not necessarily concerned about cards or whatever. So this is something cool that we're doing that's a little different. We want to stand out. And that will be our last thing. And then if anybody has any questions about anything, just, you can ask them. Well,
okay.
Sheldon.
All right, let me do that. Because I sent it out, business card, here we go. Because I emailed it to Uncle Tim. Here it is, Stephen Brewer, Pro Players. That's it. Nope. Let me get that real quick. This is what I'll do. Goodness. Okay, let me send that to me again because I'm looking at my sent. Let me inbox. Let me see Sheldon. All right, let me do that right now. I'm going to send it to myself real quick. When you all see this business card, let me share this with you. I had somebody at a networking event. He says, "Oh yeah, I got a business card, but it's not as fancy as yours." That's what he said to me. And when you see this card, let me see, compose. Let me do this. Paste. All right, Here we go. Paste it.
I know Gina told me she was looking for a card, Sheldon. I'm eventually going to try to do one for myself if I ever have time to even have somebody do it.
Okay.
All the projects that we have, but it's cool. And the big thing too, everybody, as Sheldon gets ready to do this, is it's less money than the ones that are out on the market right now. It's better and less money.
Yep. All right, it's coming to me right now. All right. All right, come on. And then from Sheldon, focus. Come on. Just waiting for my email to catch up. Come on, email. All right. Hasn't hit yet. Almost. Come on. Sent. It was sent. And it came from this one. Sent. Almost. What are you doing? Need to do it one more time. Real quick. Technology sometimes. Compose. Nope. Paste. Come on. Andrew, you haven't gotten the card yet? Andrew.
I'm learning from you right now.
I don't think Uncle Cheese Shaker 2 has gotten it yet.
All right.
I'm just like Tree Shaker 1. They just try to go shake trees and don't have time to looking at it yet. So I need you to train me today.
Okay. All right. Here we. Oh, what did it do? What? It went to the. All right. Thank you. Somebody's on the call. Thank you. I appreciate it. All right. Let me share it with you. This is why I say teamwork is the dream work. That's why I like having a team. Let me share this with you right now. Go right here, Zoom, and share the card. And here it is. And boom. All right. Can you all see that?
Yep. It's I saw a burning black swan.
Yep. There's the burning black swan. All right. And right here, you'll have a commercial. You make your own personalized commercial. I know I don't have the volume on, but I just want to share this with you because what they want you to do is create a 20-second commercial, and then here is my here's what it is about me. On the card, it tells you who I am. And then what I'll do is my mission statement. You know, you can see at Black Swan, we uncover and apply unconventional proven strategies to help individuals make, protect, and grow their wealth beyond the limits of conventional wisdom. We traffic in strategies that no one talks about. All right, here's the services. All right, Andrew, you were talking about all your services. Guess what?
Yeah.
It's on there.
Woo.
Look at there. Indemnity, R&D tax credits, resiliency, 8 to 20% off, privately owned reinsurance companies, tax reduction strategies.
There you go.
You can put everything right there. And then here are all my licenses, you see my insurance license, my MBA, and then you can see that I'm in the industry with my securities license and frequently asked questions. So they got it. One of the things that I have to have on here is frequently asked questions about the, the resiliency program. That's the one that was missed. We got the privately owned reinsurance answer on here, questions. And then what will happen too is press. From right here, I'll tell you what organizations you belong to. I belong to the Commodores Club of the Newport Beach Chamber. I sit on the board of Exit Planning Institute. They click on that. It goes to the website where you'll see, for me, again, for credibility, it's like, wow. And then you have a blog. You can put blogs in there. And then what'll happen is you can go to a calendar. So I'm changing my calendar to another one. So I didn't like my Google calendar. It was Google does not like playing with other programs well. And then here's the other thing. Look who just came up. Who do you
Uncle
see
Dan.
right there?
Uncle Dan.
Uncle Dan. And then the cool part is here's Michelangelo, who's the creator. Once you get your card, you become part of the network on here. That's the cool part about this. You can click on there and you're part of the network. So that is how the card is. I like the card. I thoroughly enjoy it. I enjoy sharing it with people. People go, wow, I love your logo. They go, oh my God, mine isn't as fancy as yours. And somebody says, I don't have your website. I said, well, you got my card now. It has everything on it that my website would have on it. You know about me just from my card.
So is that the app, Sheldon? Or how you show the card on your phone? How you send it? You text it to people, the link?
Yeah, it's like you can see this. Look, I have a QR code on it because
Okay, so they
Michelangelo
scan it.
showed me how to do the QR code. And also, and then once you go into it, then you could, and I'll show you this right here. Skip. See right here where it says, well, you can't see it because my little camera.
Yeah,
yeah. It says share, and then when you hit share, you can either text somebody or they can scan the QR code. You can put the link on anything.
Nice. Okay.
And Stan, how much is it?
$9.99.
Yep, that's right, Andrew. Very good. $9.95, $9.99, what? Under $10, cheaper than all the other cards, and it does a better job.
Yep. So that's it for me. I hope all of you got value, because whenever I'm on Zooms, I try to bring as much value as possible because I don't want to waste people's time. I'm passionate about the tax unicorn. I'm passionate about all the things we have, but the tax unicorn is the one that I'm really passionate about because it's so unique and it gets people wanting to meet with us and wanting to know more. And then when we do that, just like I don't try to sell everybody on everything. And what I always tell people, and I said, this is only the tip of the iceberg. There's even more. And that's what I tell people. So thank you, Stephanie, for sending that to me, because I was looking, I was like, my email was not working. Well, it was being slow, but thank you. I appreciate it.
That's very good. And so our last comment of the day is the most important thing, Sheldon, is to not be a what?
JAGG.
And what is that?
Just another guy or gal. You know?
Correct. You want to be value added. Whenever I call Gina, and she'll testify to this, I'll say, "Hi, I'm looking for Gina Value Added McWilliams. Is she there?" And that you're Sheldon Value Added. Everybody, I want you all to be known as Value Added, not JAG. You know?
Here's what Gina, hey Gina, here could be your nickname, VA McWilliams. You know?
I like it.
That's what you know. I'm VA McWilliams. You heard of BA? BA Baracus? I'm VA McWilliams. Value add.
That's good.
Yep.
I like it. I like it. All right, Andrew.
All right, awesome, guys. Again, appreciate all of you on the call, and get more people on the call, whether it's client or consultant. That, oh, by the way, please don't call us agents. We are consultants, because agent is selling a product. So we stay away from that. So anyway, see you next call, and let's get excited and help other, our client. Okay. Have a great weekend.
Bye, everybody.